Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is February 9th, 2024, and I'm here to bring you a little market wrap-up for the week ending today on Friday, and then also to present some trading levels for the forthcoming week of February 12th. Before we get going here, the usual disclaimer, of course. Everything that I present here from Precision Trading Labs, everything is for educational and informational purposes only, and in the case of our subscribers, to help guide them in their journey to become confident and competent traders. So let's take a look at some of the major market indexes here. Here's the SPY, which of course is the ETF of the S&P 500. Here's where we were last week when I did this on February 2nd. So that's precisely a week or so ago. And so here's where we were right here. And since that occurred, we kind of had a little grind earlier this week. We're looking at a 2-hour chart here. And then obviously the last 3 days or so, we've now made another 52-week high, which of course is also an all-time high. So that's where we are right now. And so in terms of looking at potential trading levels here, I'm actually looking, and my eye is kind of drawn to this little region right here. This is an area of interest where, and let me just blow this up here just a bit. This is an area of interest where price was up here, it kind of came down, consolidated here, and then of course notice the next on that next day, which I believe was Wednesday, it had gapped up, kind of ran a little, consolidated, and then today on Friday, we then had another move up here. And so right in here, buyers and sellers were in agreement for this, basically for about this 2-day period. And then obviously there was some change of perception and exhaustion of sellers occurred. And essentially what happened was there were no sellers that were interested in participating in here any longer. And so for these trades to have occurred, obviously buyers had to more or less run up the price chart until they encountered willing sellers. And so that's how all these trades occurred after this area of consolidation. So the thought is, when the price returns to this level here, it's quite possible that there is still some buying pressure in here. It's just that there was the sudden exhaustion of sellers here. And so as a result, when price returns here, a fair amount of the time, we will see a repeat of this behavior here. And so what we basically do is consider this, this is where buyers and sellers were in agreement, and then all of a sudden the sellers left. And so all you had left effectively in here were willing buyers. And so consequently, we think of buyers as demand, we think of supply, we think of as sellers as the supply. And so essentially what you had here was supply had left, and so all you had left here was demand. And so what we think of this then as a potential demand zone here, okay? And so what I would end up doing here is more or less kind of bracket this region like so. And so this essentially becomes an area of interest where, which we think of as a demand zone. And so what we're looking for here then is for the price to return to this level in order to execute some kind of bullish trade here. And so this is where we would express a bullish trade. And so right here, we're about 1.5% of the way from our close today. That's where this demand zone here is. We're about 1.5% down. So you need about a 15-point drop or so, or I should say about an 8-point drop from here down to here in order for us to get to execute a trade out of here. But we would be looking for a bounce out of this region here. Okay, so that's the demand zone in the SPY. And then actually further down, if that would happen to break, then there's actually this nice little 30-minute zone that's further below that. And you can see right there, price rallied up, then consolidated. Notice then again that the kind of you had this string of energetic green candles that kind of race up there. And so this is again an area where supply and demand were in balance. And then essentially there was another exhaustion of sellers. And so again, all we were left with was demand at this level here. Okay, so we have this 2-hour level here, which is about 1.5% down, and then this other level here, which is the that 30-minute that I just showed you, and that's about 2.5% down. So those are the distances involved. Okay, above there is nothing there. We will talk about supply zones in a couple of minutes on some of the other charts, but there is no supply on the SPY because we're at an all-time high here. So there is nothing to push against there. Okay, but those are our two demand levels for the SPY. If we take a look at the Qs, which of course is the ETF of the Nasdaq Composite, here's where we are. Here's where we were last week again on the on that Friday, and so now where we are, we've now made another all-time high and another 52-week high like we did last week. And in terms of potential trading levels on here, right over here, there is a potential. Actually, I'll go into this in a second. There's an intraday level over here, but in terms of a swing trading level, we're kind of looking basically right in this region, right over here. Okay, and so that's going to actually require, though, that you actually end up with a pullback, and that's about a 4% drop here. And then actually right in here, there is a potential. Actually, I guess really we could actually be looking at this as well. So right over here, this is actually kind of this is more or less the same level that we were looking at in the SPY. Okay. So right here we have a demand zone over here. Okay, at around the 427 mark here, 428. So that's that would be an area again where there was an exhaustion of sellers, and then we'd be looking for a pullback here in order to express a bullish trade. And I'll talk about expressing a trade when I get to the next chart. But again, there's no supply above here. Also, if we want to look for an intraday level, if I drop this down to, let's say, I don't know, maybe a 15-minute chart or so, I did see that there was an area of interest. Let's see, right around here. In fact, that might have even been like in a 5-minute level. Yeah, right over here. So where I put the this yellow box over here, notice the price came up here, and then notice we have this little pivot in here, and price was in here for a very brief amount of time, and then it kind of shoots up there. So right over here, this is kind of a 5-minute, and it's it's definitely an intraday level. This is a 5-minute demand zone right there. Okay, so again, we would be looking for a pullback into this region in order to then execute a bullish trade out of there. Okay, but in terms of the swing trading levels, okay, we're basically back to what I was just showing you right here. Okay, so and in terms of the swing trading levels, that's about 4% down, and then this level right here, this was about 2% down, so about half the distance to that. So these would be the two areas for pullbacks that we would be looking for, in a sense, for swing trading levels. And then there was that little 5-minute level that I just showed you. They just showed you over here, and that's in that little region right there, and that's like less than 1 point on the Qs there. So that was that little tiny level in there. All right. So next thing we'll take a quick look at is the Russell 2000, the IWM. And in fact, so here we go. Here's our chart of the Russell, and so if we take a look over here on this 2-hour chart, in fact, we actually had a trade that we executed off of here last week. And right over here we had a drop. Okay, this area right here, and then notice this area of consolidation. and then price dropped out of here. And so when price returned here, it kind of kissed off this front level and then dropped out of there. In fact, that was at the end of last week. So that's a good example of what how one expresses of expressing a trade out of the out of a supply zone there. All right. And in terms of this whole concept of expressing a trade, okay, here is what I'm referring to here. So when we have a let's say a supply zone, which is where we would express a bearish trade, one could obviously sell the stock by shorting it. Okay, one could also buy a put, which is another way of expressing a trade out of supply. And then, of course, one could also engage in a couple of very simple uh, option spreads. One on the debit side by doing a bear put vertical, and of course, one could also sell a bear call vertical. Okay, in terms of selling premium. And then on the demand side here, which right here we're looking at a demand zone here off of the daily chart. Right here, there's a rally, a base, and then notice price rockets out of there. So if we get a pullback to there, now of course that's now a longer way down from where we were last week. Okay, so that would require about a pull, a long, a kind of a dump here of about 6% or so. So that's obviously a fairly long way down. But that's actually an awesome level over here. And then the other trading level that I think that we were also looking at here, well, for the 2-hour chart, is this level right here. There's a rally, a base, and a rally over here. And so this would be a place where one could, of course, either just buy the stock directly, and of course, one could also buy a call right over here. And so, in terms of distance, that's about 2.5% down from where we are now. Okay, so that's what we're looking at on the other Russell 2000. Take a quick look at the bonds, the TLT. Okay, and in fact, we're actually pretty much exactly where we were last week. So here's where we were last week on the 2nd. Here we are now on the 9th. You can see it, just kind of meandering around here. Nothing really has changed. Okay, so this was the area where we were looking at on the daily chart here, except now we're obviously a lot closer. Okay, so right there's where we closed. So now we're about 1.5% down. If I bring the time frame up here, okay, we can now see that there was a drop, a base, that red candle there, and then notice that it pops. There's a little pause, and then it kind of rockets out of there. And so right here again, this was the exhaustion of sellers that we talked about a few minutes ago. All right, so that's the deal with the TLT. And if we take a look at some popular symbols in terms of individual stocks, here's Apple. Right down here on the 2-hour chart, this is all kind of a mess here. This is this kind of triple bottom here. There's really nothing going on in here. So we would actually, in terms of a bullish trade, we would really need to see this thing come down. Right now it's sitting at about 188. We need this thing to drop to about 176 or so. And then in here, there's a 2-hour level. And if we now go back and take a look at that, so right here is that 2-hour level here where price comes down. It's a green candle there. It's a little confusing for people that are very new at this because they're looking at it and they go, well, you just said it came down, but it's a green candle. Because in terms of once that gap occurred, in fact, there was actually, price went up. But nonetheless, this is obviously still a move down. So this is a move down. There's a consolidation here, and then it kind of rockets out of there. So on the 2-hour chart, this would represent a 2-hour demand zone right there. Okay, and then in terms of the above, there is a supply zone here. I have a little concern about all this trading that went on to the left here, because what we like to do is actually trade what we refer to as fresh zones, where price has not been back there since. And because there was all this trading here, this this level here is kind of almost a reaction to some of this down move that occurred here, even though it's structurally not pretty the way it's not organized the way this is. But nonetheless, there was some downward price pressure in here. And so essentially there was some supply here. And so this, in a sense, isn't a fresh level because in a sense, it's feeding off of what was here. But nonetheless, this could represent a good trading opportunity, but we would probably wait to see price actually drill into here and then reverse. And then at that point, we would then express a bearish trade out of there. Okay, so that's about 2.5% above there. All right, taking a look at Google. Okay, so nothing much has changed, I think, at least above. Okay, this was a daily supply zone of what we were looking at last week, and we just haven't gotten there yet. But in fact, we're now actually a lot closer than we were. So in fact, it wouldn't surprise me that if this might come up a little further, we would probably get a trade out of this week. As you can see, that we're not even 2% away from there. Okay, so right there's a rally, a base. Let me just spread this out a little here. So there's a rally, a base, and then notice that gap, that drop there. Okay, and in fact, that was actually an earnings drop there. That cross there signifies an earnings announcement. So we actually had earnings on this a few days ago, a little over a week or so ago. Okay, but this represents a good trading level when price gets back up there. Okay, so that's on the supply side. On the demand side, really don't see anything until I guess right here with this is more support. This is really not fresh demand here because we've already been back here a couple of times here. So the only other thing I would quickly check, though, I would check the 1 hour chart in here. And right over here, these would be two areas of interest that we would have right there. Notice that that's the origin of this very, very strong move. And this, in fact, this is a level that got created yesterday on Thursday. So I'll be looking at that as one area of interest. And then the other area of interest I would have is probably potentially right in here. Notice price comes up. Notice that little pause right in the middle, and then notice then that very bullish candle, another green candle, and then it kind of pops from there. Yeah, I'm not so in love with the structure of this. So in fact, I'm going to actually go back on my word here. In fact, I'm going to eliminate that. But this one, this would be kind of a short term where we could expect a short term bounce out of that on Google. All right. Take a quick look at Netflix. Okay, so in fact, nothing much has really changed here. I was looking at a 30-minute level last week on here. And we can see we've been just sort of kind of slowly grinding. In fact, this looks kind of like just like a bad EKG here. We've been just kind of zigging and zagging in here. But really haven't arrived back here. But notice right here, this is the origin of that very, very strong move. And you can also see structurally, there's a drop, a base, and then a rally out of that. And then obviously there's a great deal of energy in that major pop out of there. I do have a little concern about the trading that preceded it, because essentially you did have kind of another, basically a drop. It pops there. Notice this rejection, these wicks here, and then it kind of jumps up here a little. So there was probably a little demand here that got chewed up from this formation here. But the evidence, though, of what went on here shows that there was probably still a tremendous amount of demand left. So again, if we get that pullback into here, I think we could express a high probability bullish trade out of here. Okay, and again, well, we could either buy the stock, and of course, this is a $550, $560 share. So this is obviously ideal for using options. All right. So that's the deal with Netflix, and I will conclude here with our buddy Elon at Tesla. So let's just get this down here. For some reason my chart shifted here. So here is Tesla. So this is what we were looking at last week on the 2nd. So this is where we were last week, and I had identified this demand zone that was like 10% down, not really expecting to see that at any point soon. So it started to make its way down, and then ever since then, it's just been sort of grinding its way up. So I don't really see anything really great over here. So in fact, there's really nothing here on Tesla. So at any rate, that's what I got here. So I would like to conclude by saying I hope you found this interesting and informative and helpful. If you did, I would appreciate it if you would give us a like on YouTube, as well as subscribe to our channel. Also, we actually have we'd be delighted to schedule a call with you and talk about how we actually create high probability setups using these areas of supply and demand, and in particular how we can create options plays with more accurate entries. So please give us click on that. I'd be delighted to speak with you about this. And thank you for the privilege of your time. This is Mitch Firestone with Precision Trading Labs, and I will see you next time. Take care. Bye-bye.